When it comes to your retirement, do you want to have the same old plan everyone else has? Of course not. You're unique and have your own goals and dreams. Don't be treated just like a number. This is your retirement. So it's time to think differently. And you're in luck because you've found the Retire Your Way podcast with ILG Financial. At ILG Financial, you won't find generic, run-of-the-mill plans containing the same old cookie-cutter solutions. Dave, Chase, and the ILG Financial team focus on building one retirement at a time using their Think Differently philosophy. And that means your own comprehensive plan with customized solutions built to achieve just one goal, yours. So put on your Think Differently hats and get ready to take back control of your retirement today and for all the tomorrows to come. ILG Financial's Retire Your Way podcast was created just for you, and it's starting right now.
When it comes to retirement, do you want to have the same old plan everyone else has? Of course not. You're unique. You have your own goals and dreams. Don't be treated just like a number. This is your retirement, so it's time to think differently. And you're in luck because you found the Retire Your Way podcast with ILG Financial. At ILG Financial, you won't find generic run-of-the-mill plans containing the same old cookie-cutter solutions. Dave and Chase and the ILG Financial team focus on building one retirement at a time using their Think Differently philosophy. And that means your own comprehensive plan with customized solutions built to achieve just one goal, yours. So put on your Think Differently hat and get ready to take back control of your retirement today. And for all the tomorrows to come, ILG Financial's Retire Your Way podcast was created just for you, and it starts right now. I'm Ron Stutz. A question that comes up a lot among retirees or soon-to-be retirees when it comes to their investing is gold profits are glittering. Should I cash in? The answer, as it is with most things we discuss in this podcast, is maybe. It depends. The answer is different for everybody. But we have Chase Lopez here today to pick this question apart and see what it all means for whom. Chase, how are you, my friend?
Oh, doing great. I'm very excited to talk about this topic here today, gold. It's been a hot button topic in the news. But as you were doing that awesome intro, I was thinking, man, you know what would be cool is if the audience had a little bit of insight into our little college basketball discussion right before we got in. But we'll leave that for another podcast.
We can go on forever with that, man. I'm telling you, there's a lot to talk about right now. That's for sure. Yeah, the answer is different for everybody out there. And as we have said so many times on this podcast before, and as you say a lot at ILG Financial, it depends on the individual and the specific facts and information involved. And, you know, this whole question affects different people in different ways. So let's jump into it. What is gold at right now? What's it look like at the moment?
Yeah, so I think that's a good place to start. I'm glad you kind of teed it up that way. What we'll kind of do is kind of take a 10,000-foot view of just kind of gold and generally why people use it, things of that nature. We'll talk about the price and things like that. And then we can kind of talk about, to your point, is it appropriate, based on, X, Y, and Z. So, but before I jump into it, just as a kind of a caveat to everything we talk about, and we've said this in the past on the podcast, this is not, meant to be any sort of individual investment advice, right? We're going to be talking very generally today. So I say all that to say, for all the listeners out there, don't go jumping into your brokerage account and buying a bunch of gold as a result of our discussion here. Definitely get with your advisor or your financial professional to see if it's kind of appropriate for you.
Let me remind folks the way to get in touch with you, 540-720-5656. That's 540-720-5656. So gold. Jump into it right now, Chase, would you?
Yeah, absolutely. So right now, as of this taping, the price of gold is $4,446 an ounce, right? So when we look at the price of really anything, stocks, commodities, bonds, whatever, how the asset is doing, right? It's all kind of relative to what your time horizon is, how long you've been invested in the asset. So I think this current period that we're in with gold couldn't be a better kind of depiction of that. So I'm looking at a chart of the gold price for over the past 12 months. So if we go back, we're taping this March 27th, 2026. So if we go back to March 27th of 2025, gold at a year ago was worth about $3,000 an ounce. So it's gone up almost 45% over a year. If you watch TV at all, you are reminded of this often. You'll see the commercials for, hey, buy gold, buy this, buy that, right? So it's very much kind of in your face, for lack of a better term. If we zoom in a little bit, right, over the past month, right, it's actually down about 16%. About a month ago, at the beginning of this month, March 1st, it was at $5,321 an ounce. So over a year period, it's still up a lot, right? But in the short term, if you would have gotten in the last month, then you're looking at your holdings and you're like, oh man, I'm down 16%. Why do I kind of look at those two very different kind of scenarios? The first is what we talked about, time horizon, right? Whenever you're investing in anything, and gold is no different, right? You want to make sure that you're comfortable holding it for, a long period of time, right? We talk about this with the stock market a lot. Gold is no different. And one thing that people, I don't know if they don't watch this stuff on a regular basis, I think what a lot of people don't really know about gold is that it is very, very volatile, right? The ups are very high. We saw that when we talked about how it's done over the last year, but it can go down, and it can go down quickly. And that's why I like to look at, the last month down 16%. That's quite a bit. A lot of these price movements that you see with gold are largely dependent on kind of big global events, trends, however you kind of want to slice it, right? And obviously, all of that stuff is out of any individual's control,
Sure.
right? So we can't control what's going on in another country. We can't control what's going on with, money printing, all of these large, big kind of ideas. We don't really have control over them. So it's just imperative for you to for the listener to kind of understand that a lot of this stuff is out of your control. And if you want to be invested in gold, just understand that it's going to be volatile, right? And it's typically, you want to use it as kind of a longer term investment.
Yeah, for sure. Now, you mentioned earlier about how not all gold is, it's not taxed the same. Explain that if you would. Why is it different for some gold than for others?
Yeah, so the way that your profits are taxed when you're invested in gold, right? It's largely dependent on how you hold the gold, right? How you're invested in the gold. And this is actually a little bit unique as far as, other investments, right? Typically with stocks, if you buy the stock and you sell the stock at a profit, you're taxed, and it's pretty well understood that this is the way it's taxed, right? With gold, it's a little bit different, right? So if you actually are physically holding the gold, right? And whether that means you're holding it in storage, right? You actually are holding gold bullion or gold coins, whether you have it in the safe in your basement. I've heard that before, right? I always tell people, a little bit of a tangent, but they always say, yeah, I'm pretty risk averse, right? I keep cash or I keep gold in my house. And I say, well, yeah, I get that, right? That's a little bit of a conservative allocation, but you're taking on some other risks there, right? By having it, at your house and not being safeguarded somewhere. So with that said, right, you either are holding it in storage in your name, you either are holding it at your house, or if you're holding gold inside of, say, like a fund, like an exchange traded fund that's actually backed by gold, right? So the way these exchange traded funds work is if you own a share of the exchange traded fund, that share is entitled to a certain amount of actual physical gold, and it's backed by a big warehouse somewhere that has a bunch of gold in it, okay? Some common tickers for that is the SPDR Gold Shares ETF, or the iShares Gold Trust is another one. But basically, the IRS says if you hold one of those exchange traded funds, you are also holding the physical gold. So those are really the three ways that you can hold physical gold in your possession, quote unquote. Now, to your question, right, about how it's taxed, the way that is taxed, if you are holding it physically, is very similar to any other investments, right? So you would be taxed at your capital gains tax rates based on, if you've held it for the long term or if you've held it on the short term, you'll be kind of taxed at those capital gains tax rates. So oftentimes that can be more beneficial than your typical, income tax rates, depending on where you kind of fall on that spectrum.
I'm with you, but I'm still puzzled about a lot of things.
Yeah, so there's the fourth way that you can hold gold is if you are buying what are called gold futures contracts. And probably for the listener, I would say very few people are actually holding gold futures contracts. They're very, very complex derivatives, right? And really only professionals should be using them to buy anything. Okay. But in any event, with a gold futures contract, the way it's taxed, right, is 50% of the profits are taxed at long-term capital gains rates and 40% are taxed at short-term capital gains rates. Now, again, for the people listening to our show here today, they probably won't be using, futures contracts or anything like that. But that would be the only other way that you can kind of hold gold.
Why does it have to be so complicated?
I know. And there's always, it seems like, carve outs for certain individuals, right? But yeah, the big picture from a tax perspective, right? I would say the big picture takeaway is if you want to invest in gold, right? And much like a lot of things we've talked about on the show here, if you want to invest in gold, then I would say, hey, get with your financial professional to see the best way for you to invest in the gold, right? It may be through a fund. It may be through gold coins. Going to our discussion about sports earlier. If you watch ESPN during the day, you will see every other commercial I feel like is, hey, these new gold coins that are being minted. So that may be a way, right? But I say all that to say, you want to get with your financial professional to see exactly how that'll be taxed and kind of what the best path moving forward is for you to invest in gold there.
One thing that has always troubled me, and I think I'm probably representing a lot of people when I say this.
Oh, yeah.
This concern. They're hawking gold. You need to buy gold. But what are they taking in exchange for the gold? They're taking money. Mm-hmm. And, they're saying basically gold is going to be worth so much. Well, why are they selling it in exchange for money? Mm-hmm. It just doesn't make any sense to me. I've always had that basic question, and I don't know if you can answer that or not, but I'm sure I'm not the only one who thinks that way.
Oh, I'm actually so glad you asked that question, right? So, unfortunately, the way gold is marketed, right? The way it's marketed is kind of with this almost kind of like a doomsday hint to it. They're not really saying it, but they're kind of saying it, right? What they're alluding to, right, is they're alluding to the fact that the government is spending way more money than it's bringing in, right? And inflation and the dollar are becoming devalued. Now, that is true, right? If you look back at history, the dollar is being devalued over time. And we see this every day. Best example I can think of, and the only reason I say this is because I've mentioned this to you, Ron, I'm a new father. So, we're buying a lot of things that we've never bought before, right? Or at least...
that's going to continue for the rest of your life, probably.
Right. And the last time these things were bought was when my sisters were little, which was probably 20, 25 years ago, right? So you get that sticker shock, right? You're like, oh my goodness, this thing of formula is how much? And it was this much.
$1,000 or something.
Right. So the cost of things and the purchasing power of the dollar is going down, right? That's a fact. And gold does help with hedging against that. Right. So typically the reason why folks would invest in gold and, diversification, right. Wouldn't recommend, everyone putting all of their money in gold for some of the reasons we talked about. Right. It's very volatile on a kind of day-to-day basis. But basically what the thought process there is, hey, the value of the gold is not necessarily going up. The value of the dollars that you can exchange for that piece of gold are actually going down. Does that make sense? So the thing of gold is pretty much, it's not changing, right? But the number of dollars that you have to use to exchange for that bar of gold, as an example, is going up, right? You have to use more dollars. Now, to your point, right? There's a logistical part of all of this, Ron, and you kind of hit the nail on the head when you were talking about it, which is, luckily, we still live in a civilized world. The reason why I bring it up that way is ultimately, in order to use your money, right? In order to buy, in my recent example, right? All the baby things that we're buying. Yeah. But in order to buy stuff that you need, right? Food on the table, electricity, everything you need, you're going to buy that in dollars, right? Yeah. So there's a logistical part where you still need access to the dollars in order to buy the goods and services that you need. Unfortunately, I feel like a lot of kind of the doom and gloom that we kind of see in those commercials or, when we hear people talk about gold is there's this kind of underlying theme or underlying position that they're taking that basically, that the dollar's going to be worthless and you'll need to be trading gold coins at your local grocery store for a bag of groceries. We're of the mindset that probably won't happen, right? That's kind of the doomsday apocalyptic scenario. But that doesn't mean that you shouldn't have some gold in your kind of overall asset allocation value, because it does hedge against that dollar being kind of devalued over time, right? So there is a place for it, I guess. I wouldn't subscribe personally, right? I wouldn't subscribe to kind of those doomsday scenarios that we see on TV, right? Much like everything in life, Iran, and I'm sure you can appreciate this. Whenever you see it on TV or you see it on the internet, generally it's going to be more, what's the word?
Sensationalized?
That's it. That's the perfect word, right? It's going to be a lot more sensationalized than the situation actually is. But there's a kernel of truth in kind of all of it, right? And I would say the kernel and truth of those kind of doomsday scenarios is, if you look over time, right, gold has been a good kind of hedge against, devaluing of the dollar and, government spending that is a lot higher than maybe folks think it needs to be. I loved that question, and I think that it's a great kind of segue into letting folks know, hey, if you either do have a lot of gold exposure, right, going back to what we were talking about at the top of the podcast, if you have a lot of gold exposure, it's probably gone up, as we kind of illustrated a lot, over the last 1 to 2 years, right? So it's definitely worth a discussion with your financial advisor to see if you're kind of overexposed to gold at this point. If you have no gold exposure and you're thinking, oh man, is it too late to get in? What should I do? Should I get in now? Again, that would be a great discussion for your financial professional to see how it kind of fits into your overall plan.
You know how they always say these days in advertising pharmaceutical products and all kinds of medications, your cost may be as low as $0. I don't know how we all got started on that, but $0, that makes no sense. What if you have $0? You have no money, no cash. It's not like you can, go get some of your gold and shave off a little bit of it and take it to the grocery store. That's the thought that just keeps occurring to me,
Oh yeah, absolutely. That's to the point, right? Which is ultimately the gold's going to have to be traded in for dollars, right? But the argument for having at least some gold exposure, right, is we'll use the gold bar just as an example, right? Okay. The gold bar today, you're going to get a lot more dollars for that gold bar today than you would have 12 months ago, 24 months ago, right? So it does help in that sense, right? But again, if I wouldn't necessarily say you want to put all of your money in gold, just like you wouldn't want to put all of your money in any one thing, right? Diversification, right, is something that we strongly believe in, but there is a place for it. Again, what that place is for each individual person individually, that depends, right? Kind of on the theme of what we were talking about. But that's what I would say to kind of the listeners out there. If they want some, specific advice on their specific situation, get with your financial professional, right? And you may have some, because those gold funds are so easily accessible, right? You may have some gold exposure inside of your portfolio and you didn't even really know it, right? Until you kind of broach the subject with your financial professional.
Now, if you do own some gold and somebody's holding it for you, or it's inside some kind of a product or whatever the case may be, aren't you going to have to pay some kind of a fee for them to be holding that and to get it out?
Yeah, great question. So it kind of depends on how you're holding it, right? Specifically with those funds I was talking about, the cost is very low, right? I'm not sure the exact cost, but it's pretty negligible with those funds. Okay. And the reason is, much like a lot of things in life, it's because it's at scale, right? So things generally cost less when they get to scale, right? That's the old Costco euphemism, right? Yeah. Why does, a pack of Gatorades at Costco cost per Gatorade a lot less than at the grocery store? Well, just because you're buying a lot more Gatorades, right? So similar thing with the funds. Now, if you're actually paying for actual storage inside of a vault somewhere, which some people do, right? Yeah. It can be a little costly, right? So the fees on that kind of range depending on who you're dealing with. If you wanted to go that route, that's certainly one way. Now, if you're storing it at your house, right? You have gold bars and you're storing it at your house. It goes back to what we talked about before. May not cost a lot, but you are taking on some risk there, right? Sure. As far as, what if your house burns down or something happens, right? Yeah. There's some risk associated with that as well.
Somebody breaks in and steals it or whatever.
Right. So, there's much like anything, right? There's a little bit of risk associated with each of those different ways of doing it. With that said, right, on our end over here, and again, this is not, individual advice or anything. Typically, we like to use those funds, right? Because it tracks the price of gold. So if gold goes up, then your value inside of that fund goes up, right? And they're it's very easy to exchange the funds that you have in the gold fund. It's very easy, to exchange those for dollars. So to kind of your point, Ron, right? If you have the gold in a storage facility, right, and you're paying like a monthly charge, right, to have it stored there. Well, if you want to take the gold out and exchange it for dollars to use the money, then I'm pretty sure there's, fees associated with, all right, we have to get the gold out, we have to go sell it somewhere, right? And then there's kind of fees in each kind of leg in the transaction there. That's why sometimes those funds are a little bit easier and a lot more practical for folks if they want to, put a small amount towards gold.
This whole discussion about gold has been really fascinating to me. And, Chase Lopez at ILG Financial will be happy to talk with you about it and break it all down. And Chase, is there anything else we need to talk about when it comes to the subject of gold before we close out today's discussion?
I don't think so. Big picture, right? I would say a couple takeaways for the audience, right? Number one is think of gold as, any other investment. There are risks associated with it, just like there are risks associated with other investments. Now, the risks may be different, right? But there are still inherent risks. That's not to say it's good or bad, right? But you just want to make sure that you're completely comfortable with what those risks are, right? That's what you would want to get with your financial professional about to see how it fits into your overall plan. Number two is it's taxed just a little bit differently than other assets, right? Again, that's not to say that that's good or bad, but you at least want to be aware of how that works. And again, your financial professional can kind of touch on that with you. And lastly, I would say folks just want to keep in mind is that if you look at gold, it's just as volatile as any other investment, right? So it goes up, it goes down, and pretty big moves. So again, you just kind of want to be aware of that as you kind of endeavor into this new world if you're not too familiar with gold.
Well, Chase, I really appreciate your taking the time to explain all these things today. I think I understand a little bit more about gold than I did when we started, but it really is kind of a complicated subject, and I know that if there are folks out there who would like to talk more about it, they will be in touch. So, thanks very much, and I appreciate all your tips and all your ideas, and certainly has provided us all with a lot of food for thought, for sure.
Oh, yeah, absolutely. Always a pleasure to hop on here, Ron. And it's always cool to talk about a little bit of a different subject than we normally do.
You are now one step closer to learning what a customized retirement strategy can do for you, even including gold, perhaps. This is the ILG Financial Retire Your Way podcast with Chase Lopez. Income, legacy, growth, it's all right here at ILG Financial, and it's about helping you plan for retirement your way so you can achieve your financial goals. Call Chase Lopez or Dave Lopez today at ILG Financial, 540-720-5656. That's 540-720-5656, or go online to ilgfinancial.com to learn more. This is the Retire Your Way podcast. I'm Ron Stutz, along with Chase Lopez at ILG Financial. The information provided is for educational purposes only and is not intended as investment advice for any individual or entity. All information contained herein is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. The views presented today are those of Dave Lopez and do not necessarily represent the views of the Alpha Star Capital Management, LLC. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Investment advisory services offered through Alpha Star Capital Management, LLC, a registered investment advisor. Alpha Star and ILG Financial, LLC are independent entities. SEC registration does not constitute an endorsement of the firm by the Commission, nor does it indicate that the advisor has attained a particular level of skill or ability.
Hey, Chase Lopez here. Thanks for listening to Retire Your Way with ILG Financial, our podcast. Make sure you head to our YouTube channel as well to check out our video series, Retire Your Way with ILG Financial. Also, don't forget to subscribe and like our videos there so you can be alerted for any future videos. Talk to you soon.